Good afternoon, ladies and gentlemen. I'll welcome you to the 8th floor of Henry 1C building of Trisakti University. And also I welcome to the online participant on Zoom meeting. The Honorable Mr. Dr. R. Murtanto, aka MSc CA CPIA as the head of Accounting Study Program. Ms. Dr. Arasyana Dewi, SA, aka MSc CA as the head of Tax Accounting Diploma Program. Ms. Hasnawati, SA, aka MCOM CA as the Secretary of Tax Accounting Diploma Program. Mr. Agus Kunchara, SA, MEC, as the representative of Direktorat Jenderal of Taxation. Mr. Adjunct Prof. John C.G. Lee from Renmin University, China, as the speaker. Mr. Lim Ian Sugondo, MM, MBA, as the lecturer of Tax Accounting Diploma Program and moderator. The honored Ms. Trisninik Rati Wulandari, SA, aka MSc, as the head of Tax Accounting of Vocational School of Sebelas Maret University. Mr. Agung Sri Wardani, SMA, as the Director of Politeknik Ubaya. Mr. Yusuf Mulus Riptianto, SEMAK, as the head of Study Program Politeknik Ubaya. Ms. Kurniawati Oktarina, SSI, MT, as Rector of Institut Maritim Prasetiya Mandiri. Mr. Dr. Tarto Tutuko, SHMM, MBA, from Institut Maritim Prasetiya Mandiri, Lampung. Madam Answer, Lecturer of Economic and Business Faculty, Trisakti University. And as well to all participants both on Zoom and this valuable room. Ladies and gentlemen, as the purpose of the event, we will attending international seminar discussing international taxes to get know more a business perspective in cross-border trade, investment, transfer pricing, and treaties. My name is Salwa Hayati. I'm a student of Tax Accounting Diploma Program, and I will be the Master of Ceremony on this occasion. This international seminar is held by a Tax Accounting Diploma Program of Trisakti University, collaborate with Politeknik Ubaya, Vocational School of Sebelas Maret University, Institut Maritim Prasetiya Mandiri, and supported by the Tax Center of Trisakti University, Direktorat Jenderal of Taxation of Republic of Indonesia, the Association of Indonesian Tax Consultants and Practitioners, or PERKOPPI. Ladies and gentlemen, before we begin, allow me to read the main agendas of the seminar. We will begin by addressing report from the head of Accounting Study Program, keynote from speech Direktorat Jenderal of Taxation, plaque and documentation, followed by the core of the seminar, and another plaque giving and documentation, and to close the ceremony. Ladies and gentlemen, we are now going to listen to the speech delivered by the head of Accounting Study Program. Please welcome Mr. Dr. Murtanto, aka MSc CA CPIA.
Assalamualaikum warahmatullahi wabarakatuh. My name is Murtanto, as head of accounting department, Trisakti University, also head of study program, accounting study program for Strata 1. Yeah. Okay, today diploma taxation of FEP Usakti deliver the seminar, international seminar with the topic international tax business perspective in cross-border and then etc. I think this topic is very interesting and very important, yeah, to discuss for all participation. Yeah. To get some information from some speaker, like today from Professor John Lee, from Renmin University of China, Pak Lim Jan Sugondo, tax practitioner, and Bapak Agus Kuncara, Kepala Subdirektorat Pencegahan dan Penanganan Sengketa Perpajakan Internasional DJP. I think very interest to discuss and giving some support and some suggestion to increasing the economic growth. Yeah, I think very interesting. So the seminar also support by co-hosts from Politeknik Ubaya, and the picture has Bu Agung Sriwardani as a director. Selamat siang Bu Agung. And then Pak Yusuf Mulus Riptianto as Kaprodi D3 Pajak Politeknik Ubaya. And then second from Vocational School Universitas 11 Maret, Bu Trisakti Ratih Wulandari as a Kaprodi D3 Perpajakan. And the last from Institut Maritim Prasetiya Mandiri, Pung, ya. Ibu Kurniawanto Oktarina as a rector, and Bapak Tarto Tutuko. Ya. I just give appreciate and say thank you to speaker Prof. John Lee, Pak Lim, Jan Sugondo, and Pak Agus Kuncara, also some co-hosts, yeah. And then the last my speech is, I think, to all participants, yeah, get some information from a speaker, and then you can get some shorts from the speaker to adding on the subject, yeah, about the international taxation. I think enough from me from my speech. Thank you. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you, Mr. Dr. Murtanto, aka MSc CPIA, for the opening speech. Ladies and gentlemen, now we are going to listen to the keynote speech. It is our honor to have a keynote speech from the Direktorat Jenderal of Taxation of Republic of Indonesia. This keynote speech will be delivered by the head of Subdirectorate of Prevention and Handling of Internal Tax Dispute, Mr. Agus Kuncara, SE, MEC. But before that, please allow me to read the CV of Mr. Agus. Mr. Agus Kuncara was born on 8 August 1969 at Ponorogo, Indonesia. Began his education at STAN Indonesia for Diploma, University of Indonesia for Bachelor's on Economic, and followed at Yokohama National University for Master of Economic. Began his career at Banteng Tax Office on November 2016 until September 2019. And now works at Directorate of International Taxation as the Deputy Director of International Taxation for Dispute Prevention and Settlement since June 2023. Please welcome Mr. Agus Kuncara, SE, MEC.
The Honorable Speaker, Ajang Professor John Oli, from Renmin University, China. And then the faculty members of Diploma Taxation of Faculty of Economics and Business, Trisakti University. And then from online, I saw the three university, Politeknik Ubaya, and then the faculty member of Diploma Taxation at UNS Solo, Surakarta. And then the other one is the faculty member of Institut Maritim, Prasetiya Mandiri from Lampung. And then our student from Diploma Taxation of Trisakti University in hybrid Zoom meeting. Assalamualaikum warahmatullahi wabarakatuh. Good afternoon. It is a great pleasure for me to deliver a keynote speech for today's forum with the theme Business Perspective in Cross-Border Trade, Investment, Transfer Pricing, and Treaties. Let me allow me to begin my my gratitude for our host, Diploma Taxation and Tax Center of the Faculty of Economics and Business, Trisakti University, for the effort making of this forum. As the MC said, I am Agus Kunchara, the Deputy Director for International Taxation for Dispute Prevention and Settlement. On behalf of our director, the Director of International Taxation, Bapak Mekar Satria Utama, would like to pass through his apology for not being able to join today's discussion due to another agenda. Hence, I'm here to represent him to participate in today's seminar. So let me start the presentation. In our increasingly interconnected and borderless world, cross-border transactions have become a fundamental part of international business. This transaction significantly impact to the economies of nation and the tax revenue. As our world have become truly borderless, multinational enterprises or MNEs has begun transforming into global players. In this landscape, we have witnessed capital becoming extraordinarily mobile, often referred to as a flash capital. They can move from one country to another country rapidly. As a result, the traditional connection that MNEs had become their home country have weakened. They operate as global entities, transcending the boundaries of nation states. The global shift led to significant business restructuring occurring on a truly global scale. The importance of intangible assets, such as intellectual property right and brand value, has grown exponentially. In many cases, we see that excess of or residual profits are being shifted to low tax offshore jurisdiction, rather than remaining in the country of source or resident. This phenomenon has raised concern about fair taxation and base erosion problems. Furthermore, we are witnessing the emergence of global management philosophy, where physical location is becoming less important than access to information. In today's digital age, e-commerce, big data, and the free flow of information have changed the nature of doing business. These developments are redefining how business operate and how they generate profits. And how is anticipating this challenge from two sides. One is attracting investment or increasing revenue. Jurisdiction worldwide face a twofold challenge in response to cross-border trade and investment. Okay, I continue. To address these challenges, jurisdiction must anticipate and respond effectively. This involves a twofold approach. The first one is attracting investment. Countries must create business-friendly environments to attract international investment. They must promote policies that encourage MNEs to establish a presence within their borders, leading to economic growth and job opportunities. And the second one is increasing revenue. In the other side, at the same time, nation needs to ensure they collect a fair share of taxes to fund essential public services. Striking the right balance between attracting investment and collecting taxes is a crucial problem. It is important to emphasize that this balance should be achieved without compromising a national sovereignty. Each country must maintain its ability to govern and legislate its tax law independently, but in the same time, country needs to adopt the development of international tax landscape. Kevin Holmes prescribed 5 primary objectives underlying a country incorporation of international tax rules into its tax legislation. One is national wealth maximization. The second is tax equity. The third is economic efficiency. The fourth is administrative efficiency. And the fifth is international compatibility. And what's the rule of tax treaties? Tax treaty or double tax agreements, we call it DTAs, play a pivotal role, important role in addressing these challenges. They serve as framework for fair distribution or taxing right between countries. Tax treaties are crucial instruments that facilitate international business by providing a framework for the allocation of taxing right between countries. They help reduce double taxation, ensure taxpayer right, and facilitate cross-border investment without putting aside the country's sovereignty. As West acknowledges that taxation is an inherent or essential component of sovereign status, tax treaty denote the coordinate actions between countries. And how Direktorat Jenderal of Taxes conducting common tax dispute in cross-border transaction. It's not uncommon for dispute to arise in the realm of international taxation, and this can have far-reaching consequences. The most prevalent dispute revolve around the main areas. Transfer pricing became the most common disputes area in Indonesia in relation to cross-border business arrangements. Transfer pricing dispute arise when the pricing of transaction between related entities is not consistent with the arm's length principle. This dispute can lead to disagreement between tax authority and taxpayer, and even between tax authority among jurisdictions. On top of that, tax treaty dispute can arise when the interpretation or application of tax treaty by taxpayer is contested by the tax authorities or different interpretation between jurisdictions. These disputes can be complex and require resolution mechanism. How Indonesian instrument in addressing disputes? Indonesia has taken proactive stance in addressing this cross-border business or international tax dispute. We have established the Mutual Agreement Procedure atau MAP is stipulated in Ministerial of Finance Decree number 49 of 2019 and Advanced Pricing Agreement APA stipulated by Ministry of Finance Decree number 22 of 2020. APA and both APA and MAP as effective mechanism for resolving disputes and preventing them from occurring in the first place. In the current amendment of Indonesian international tax landscape, we start to recognize the multilateral approach of dispute resolution in addition to bilateral and unilateral form of MAP. These foods provide a transparent and cooperative approach to conflict resolution and help maintain a positive business climate in our country. In conclusion, it is our responsibility to navigate the ever-evolving landscape of cross-border trade, investment, transfer pricing, and tax treaty. We must collaborate to develop solutions that attract investment. On the other hand, increase tax revenue and then maintain sovereignty of the country. I think this for my keynote speech. Thank you for the attention, and I look forward for instrumenting discussion during this seminar. Thank you. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you, Mr. Agus Kunchara, for the keynote speech. But before we next to another agenda, we would like to present the ceremonial gift to Mr. Agus. And to present the ceremonial gift, we will kindly invite Ms. Dr. Erosyana Dewi, SEAK, MSECA. May please come forward.
Oh, nggak ada. Cancelan dulu kecil.
For Madam and Sir lectures, also college and friends, kindly please come forward for the documentation session. Thank you.
Kalau sekarang ini sebenarnya akses tentang ini akan dibagi juga.
Ladies and gentlemen, we have to come to the core agenda of our meeting to hear and discuss about international tax from our speaker, Mr. Adjunct Prof. John C.G. Lee. This session will be moderated by Mr. Limian Sugondo, MM, MBA. Before beginning the session, allow me to read the CV of moderator. Mr. Limian Sugondo lives at Central Jakarta, began his education at Trisakti University at 1994 on accounting for the field of study. On 2005, study at IPMI Business School or Monash University for MBA, and from 2022 until present, study at University of Sultan Ageng Tirtayasa for doctoral degree. Start his careers at Arthur Anderson on 1994 until 1997 as a senior auditor. On 1997 until 2000, works at PricewaterhouseCoopers as a senior associate accountant. And now, since 2015, works at public accounting firm Gatot Permadi as an assurance and tax partner. Mr. Limian Sugondo, MM, MBA, please come forward. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. Shalom, Om Swastiastu, Namo Buddhaya, salam kebajikan, salam sejahtera untuk kita semua. Good afternoon, ladies and gentlemen. Madam Rosiana Dewi as the head of Diploma of Taxation Program. Madam Hasnawati Zainal, vice head of Taxation Program, Diploma. Mr. Murtanto, Head of Accounting Department of Trisakti, Mr. Agus Kunchara from Indonesian Direktorat of Taxation, fellow teachers, colleagues, and students, distinguished guests. It is such an honor for me to be here as a moderator in this great seminar titled International Tax, a Business Perspective in Cross-Border Trade, Investment, Transfer Pricing, and Treaties.
Iya.
And with
Ini
us,
dapat sertifikat nggak?
we have the distinguished adjunct professor, John Lee Chuan Guan from Renmin University, China. Good afternoon, Professor. It's very honored to have you here. Before we start our session, I would like to read
Dari siapa?
CV of Professor Lee
Dari siapa? Angel.
because it's a very long CV. I will highlight most important milestones. Yeah. Professor Lee currently is a young professor from Renmin University of China, Shenzhen, teaching sustainability and corporate governance, and also circular economy and sustainability strategies in 2021. Dutch Business School, Cambridge University, UK. Professor Lee graduated since 1983 in Bachelor of Science in University of Newcastle, UK. And also in 1992, he graduated from University of Leicester, UK, Master of Business Administration. And also in 2017, from American Trinity University, USA, postdoctoral honoris causa. Okay, without further ado, please welcome Professor Lee.
Honorable Bapak Agus, learned faculty members, fellow students, ladies and gentlemen. It's indeed my pleasure to be invited here to share my thoughts with you on the matter of international tax. I'm very fortunate that Bapak Agus has already laid out the overall view, so it makes it very much more easier for me to put in the pieces. If I speak too fast, raise your hand and ask me to slow down, because English for me is like bahasa to you, very fluent. If I use words that you don't understand, don't be shy to say, can you rephrase this word? Okay, but I will try to slow and use simple terms, but sometimes in the excitement of things, I forget myself. Okay, right. So with your permission, I shall proceed. Next, please. Okay, so where I'm taking you is an overview, and it is taking you out from Indonesia to cross jurisdiction international. So I wonder, have you all brought your passport along? Some of you are lost, some of you are smiling. Okay, what is meant to be a joke. Don't be so tense. Okay, I am not a government official, so you don't have to be so tense. I'm only a student like you, an older student like you. Okay, so what it is? Okay, let them. Yes, wonderful. Thank you. So what it is that I'm going to give you a non-accountant, non-tax lawyer's view of international taxation and its related issue. It will be, if you can imagine, put yourself as the CFO, the financial controller, the financial professional, which all of you will one day be. Don't worry. Today you may be a student, but down the road, 10 years, 20 years, you could easily be a CFO of a listed company, or you could be the tax official like Bapak Agus also, yeah? Okay, we got to start somewhere, and you are starting in the right place and in the right school. Okay, so very often you're asked to give a high level view, a wide angle perspective to your bosses or to your senior colleagues and to corporate client or MNCs who are coming to Indonesia to invest, or for that matter, Indonesian NMC going overseas to invest, the issue involved. Some of you may be involved with high net worth private client, meaning private banking. Okay, all these are there that you have to consider. And it is important, therefore, to have an understanding.
Hey, Mama.
Sorry, not in. Okay, so it is very important to have a perspective of why the boardroom is asking and what are they asking for. Okay, so meaning that you look from their eyes what they are wanting to know and hear. Okay, be it the boardroom, be it the C-suite, that means your CFO, CIO, and all the C officials, as well as your high net worth client. Okay, because believe me, in Indonesia, there is a lot of high net worth client involved. Yeah. Okay, next. Okay, so where you are looking at is the taxation regime of the corresponding country that you will be trading with, you are investing in, holding fund or deposit. Okay, now very often MNCs will hold their fund overseas. They will not be holding in one country. That is part of a strategy of spreading your risk, of diversification, and sometimes you hold it where your country you are generating the most revenue. So you have to understand it, as well as transiting, meaning your money going across electronically or in person. Okay, you may be one of those persons involved. Okay, that's the thing. And not yet, belum. Okay, then about tax planning. If you are the corporate headquarter or the OHQ, the operational headquarter, okay, they are significant. What is the advantage? What is the disadvantage? As well as whether there is double taxation agreement between one country and another, and therefore you can mitigate paying too much tax. These are all things that you must have in mind. Okay. In short, what we are saying here today for you is that to rise to a CFO or CFC level, you must start be thinking in that direction. All right. You cannot be thinking a little bit on just being the warung. You know, you must know anything about being the PT. Okay. You want to be thinking of the conglomerate that has got multiple listing outside of Jakarta Stock Exchange. That is the mindset, that is the knowledge you have. Okay. And in Trisakti, this is your career option. You have to put in the effort, but this is your career option that you can scale to the very height. Maybe one day you'll not be sitting in Jakarta, but you'll be sitting in Singapore or London or Paris, you know, managing millions of dollars. And it's happening. Okay. You as the individual is possible. Yes, ma'am. Thank you. Okay, so you can see that in terms of tax planning, okay, the corporate HQ is responsible for the overall strategy and governance. Governance is very important because you want to avoid what? Fraud. You want to avoid what? Okay, you want to avoid tax avoidance. Okay, you want to avoid the situation of money laundering. Okay, can you press allow recording? Permission granted. The computer is asking for permission. So until you got to, maybe you got to tick in the box, apply there, you tick OK, and then you apply allow recording. No, back again. Okay. Okay, it says okay. Okay, so that then goes, if you are in a very large MNC, there are often a situation whereby beside the corporate HQ, you have the operational headquarters. It could be the Asia operational headquarters. And why they do it is because it can be more efficient and it can be more into the local condition. All right, that's why they do it. Because if it is one corporate and the business is so large, sometimes it is not efficient because they may not know the local tax condition within the region, within the country. Okay, so that's why they have that 2 layers. So these are for very large MNCs. Okay, next please. Okay, here is where we look at some of the tax advantage because you are looking at sometime the profit where you want to record your profit. Okay, I know there's transfer pricing possibly involved, but let's keep to the tax advantage. So if Indonesia give a very low and nice tax and a lot of tax incentive, MNC may want to record more of their profit in Indonesia, for example, or there are certain investment incentive in Indonesia, so they may want to invest more. So you want to plan all this in looking at the tax advantage, and it could be just the corporate tax rate, it could be the investment tax credit that they give, or the reduced property tax. You got to look at it holistically, the tax advantage of the different country involved. Remember, we are talking of international. We are not just talking of Indonesia, yeah? Okay, so now your horizon must be international. Okay, that's why early on I asked you all to bring your passport. Did you all bring your passport? So for those who have not brought your passport, you know why you are not following. Yeah, so don't forget, bring your passport. Okay, so the other thing is transfer pricing. Transfer pricing is a very sensitive thing. Okay, and like Bapa Agus has said, there are what is called arm's length, what is acceptable, what is not acceptable. So you got to know the differences. Okay, there are many big cases of big company not paying tax. Okay, although they are making a lot of profit in one country, but they are not recording the the profit, booking the profit in that country. So there is this concern, and we will come to that specifically. And then in terms of local tax compliance, this is why they have that different level so that you can comply with the local requirement. Okay, each country has their unique tax regime. No two countries is alike. Okay, that is clear. Okay, next. Free trade agreement, and that is something that is happening a lot. And free trade agreement generally is either bilateral, that means between two countries, or multilateral, meaning between many countries. Okay, and it is to reduce the trade barrier so that more trade can happen between the two countries, right? It includes tariffs and quota, goods and services involved. Okay. As it is, the primary goal is to facilitate and promote trade between the country to be more open, right? And it also has provision related to intellectual property, investment, and other aspects of trade and economic cooperation. Next, please. So some of the example of bilateral free trade agreement is the Indonesian-Australia Comprehensive Economic Partnership Agreement that is there, as well as the other one, the Indonesian-Japan Economic Partnership, which is an FTA between Indonesia and Japan. And then you have the multilateral FTA. And the big one, which has recently happened, is the RCEP, stand for Regional Comprehensive Economic Partnership. And it is a cooperation between the ASEAN 10 country and the other 5. And who are the other 5? China, Australia, New Zealand, South Korea. Who am I missing? China, Australia, New Zealand, Japan, Korea. That's it, the 5. So it's the ASEAN 10 and these 5. Okay, and the whole idea is that we want to increase our trade with reducing tariffs and barriers on each other's. And trade is where we help to have each country to grow on their strength. Okay, next. The other interesting part is the free trade zone, and it's or sometimes better known as the special economic zone. And this is where it is geographical in nature within a country. Okay, and the most famous of it all and the most successful is the Shenzhen. I'm jumping a little, but it's the Shenzhen Special Economic Zone, and it have helped to lift China from purely an agrarian society, very poor. All right, back in the 70s, it started in 1979 by the leader Deng Xiaoping. Okay, to drive as the driver, as the locomotive, right, for China economic growth. And many other countries are trying to emulate, to copy and do it. So what it is that the primary goal is to attract foreign investment to promote growth in a particular geographical region. So for example, it's in the Shenzhen Special Economic Zone. There they will give you a lot of tax incentive, reduce custom duties. They will simplify custom procedure, regulatory flexibility, including registration, as well as employing local people. So what we want to do in a few things, number one, is to drive the GDP, promote and create more jobs for local people. And then in the process, it becomes the driver for economic growth for the rest of the country. So that is one of the major purpose and success story there. Okay, next. So in investment, in summary, there are two thoughts. One is the special economic zone, which is on profit. I'm giving you this example, which is China, whereby they give you for the first 2 years full tax waiver, and then the next 3 years is half. It could have changed, but this is an example. Is an example of how special economic zone work. It also can give you on imported capital equipment for their investment for your own use. It could well be zero tax, all right, and simplify custom procedure. On your ownership of your property and sales, it could be simplified. That's the whole attractive part of the package. And what is very important is that very often all these new investment will need to bring in the expatriate, the key personnel, be it the CEO or the general manager, and also the engineering and the expertise staff, in terms of their income, in terms of the visas for their family. Okay. The other thing that you have to note is that because you talk of investment, you have to be asking whether this country has got an investor-state agreement on dispute resolution. All right, big word. Next. Okay, so what it does is that ITSID, as we call in short, Investor-State Dispute Resolution Investment, is a process whereby an investor has a problem investing in one country, and that country is giving problem. Okay, I can give you a lot of wonderful experience from India, right, whereby company, overseas company, be it General Motors, Walmart, Xiaomi, investing in China, and then the tax authority comes in and say that you owe tax 5 years ago, and they change law in terms of tax. So in such instant, if you go to the local court, there is a perceived, and quite often it's true, prejudice, bias against foreign company. So what is the solution? The solution is that ITSID create a platform whereby you can bring your case to arbitration, all right, to arbitrate your case under ITSID rule or under similar rule. So that is something you don't have to know detail, but you, because as an accountant, that's for the lawyers or your legal department to do. But as part of your work in sort of exploring and understanding investment environment and regime, you got to be understanding to say, is there a investor-state dispute resolution clause in that country? And what are the centers, what are the rules? Further details, you can always bring it to your legal department. Okay. Similarly, sometimes if you're in a bigger organization, you can trigger, you can highlight your legal department and say, we are going in to invest in XYZ country. Please advise on investor-state dispute resolution. Okay. So this is something as accountant, as CFO, you don't have to know the detail, but you must be knowing that these are information that will ring a bell. Similarly, if you are sitting on the investment appraisal committee, right, and this thing comes out about investment in a certain country, you would like to ask this question: is there such a clause? Okay, not to ask you to go into details, but you must know that there's such a thing. Okay. This one is transiting in person or electronically. In the last 10 years, especially the last 5 years, you'll find that there is a lot of sanctions flying around. There's one category called the United Nations sanction, which is really multilateral. Okay, that one, most of us respect fully. Then there's those that is the unilateral, which is imposed by one country. But because they are so big, okay, and their stake is so big, we have to comply. Okay, so for example, is when they go into, and I give you an example, is when Russia marched into Ukraine, all right, SWIFT, the International Payment Settlement, was frozen, their asset was frozen. Okay, that is something we want to be looking at. Then you're talking of transiting in person and electronically, as well as that is the new wonderful world of settlement in national currency agreement. Okay, next. So sanctions are imposed by countries. Well, actually start with, like I said, it could be by United Nations. like United Nations sanction of North Korea, right? That is a United Nations sanction. It is multilateral, right? It is imposed by a country to influence the behavior of others, right? It may include trade restriction, asset freeze, or travel ban, right? It has got potentially negative humanitarian impact as well as ineffectiveness, which we will go a bit later. Okay, so I mentioned about those that is from United Nations. Example is United Nations sanction of North Korea. That is one that is been voted in the United Nations. And then there's those that we call unilateral sanction, as I mentioned earlier, by a single country targeting specific country, entity, or individual. Next. What is problematic is that some of this unilateral sanction is also secondary, meaning that although they say I sanction this country, but you, although are not sanctioned, you cannot trade with them. If you trade with them, then they will come after you. Okay, so I give you an example, which is the Huawei case, whereby they claim that Huawei is dealing with Iran and they go after Huawei. Okay, so far it is not a proven case. So these are called secondary sanction. Or example, they say you can't buy Russian oil. Okay, if you buy Russian oil, they will sanction you also. So that's called secondary sanction. For now, I'm not talking of the political aspect. Let me qualify. I'm explaining to you the mechanics of what it is. The political right and wrong, we leave it for another day. Okay, but here now I'm just sharing with you what is unilateral, what is secondary sanction as an example. Okay, so the measure include as it is, restriction on your trade, financial transaction, what you can buy, what you can't sell, okay, as well as they can freeze your asset. Example is the Russian central bank asset being frozen. Okay, just a little sidetrack is that national assets, each nation has what you call a sovereign immunity. Okay, meaning one country cannot judge or sanction another country. If you want, you got to fight the case in the court of that country. So to be freezing state central bank asset, all right, it is going against the principle of sovereign immunity. Okay, so you have to understand that there is this element there involved. If they are freezing private enterprise, that's another matter. Okay, that's another matter. Okay, next please. So here again is we are talking of the pros and cons, and that is the issue of diplomatic leverage. That means they are using this leverage, okay, sanction, to force other nations to abide and comply with their decision. Okay, but secondary sanction has got global impact, and it extends beyond the individual and the entity. Okay, and the thing is that they are hoping in this process to encourage adherence, I mean compliance to international norm and agreement by holding the violator accountable and thus enforcing global rules and standards. That is the ideal they have behind secondary sanction. That's the pro. Next. Okay, the con is that I mentioned earlier on is the sovereign concern, meaning that you sanction, but this is a sovereign issue, a sovereign immunity issue, and it's not subject to any country sanction. That's one issue. Second risk is that if you sanction, then the country will reciprocate, then there will be an escalation. Escalation is not good for international trade or international business. So that is the intent, that is the issue. And then there is the unintended consequences, meaning that in secondary sanction, some of the unintended consequences is innocent businesses and individuals are faced with hardship because of secondary sanction. Yeah. And then, as mentioned, it disrupts trade, global trade. And it has been found that through the years, secondary sanction is not really that effective. Simply to come back to the US and EU sanction on Russian oil and gas, was it effective? As far as it is, all of us can see, Russia is still earning foreign exchange on their oil and gas. Their ruble is still very strong, whereas the EU is suffering from high energy prices. Germany, France is in recession and in big trouble. You see the social unrest that is happening. So this is what you mean by being ineffective. Yeah, next. So the classic example of secondary sanction on people is the incident of the Huawei CFO that was arrested in Vancouver Airport, Canada, not in the US, based on a US sanction on Iran. And she was arrested on the 1st of December, 2018. Her case was being sort of on trial in Vancouver, and she was to be transferred, all right, to the USA to face trial. But it didn't happen because she was returned to China on the 25th of September, 2022. And the US Justice Department dropped all charges, and therefore that's why she can go back. And that arrangement is called deferred prosecution agreement, right? I bring this case up is that because it involves a CFO, you all may be a prospective CFO, so you have to be mindful of such matter happening. Okay, thank you. Okay, so what is SWIFT? SWIFT is basically the international settlement that is in place for a long time. Okay, what it is that, for example, from Indonesia, you pay to, let's say, China. Okay, in old days, you got to go through SWIFT. And the settlement is very largely on US dollars. Okay, this is changing, but I'm just telling you the background. So SWIFT is founded in Brussels by 239 participating institution. It is supposed to be independent, okay, not subject to any country. Unfortunately, over the last few years, we can see that it is not really that independent. Okay, it has been, the word they use is weaponized. It has been used as a weapon. Okay, so that's what it is. And this is why later on we will be talking about local currency transaction, LCT. Okay, it has created not only a de-dollarization move, but a move to trade and settle in local currency. Next. Okay, so I mentioned about freeze SWIFT being used to freeze Russian state asset and Russian citizen asset. Now, this is where you ask the question is, what has the Russian citizen done wrong, except for being very rich, except for being close to the government or maybe to Putin? What has he or she done wrong? There is major implication because of all this happening, right? All the oil-rich sheikh in Saudi Arabia, in Kuwait, is pulling out a lot of fund from Switzerland, because Switzerland from neutral to taking side, right? They are putting fund from other than US dollars or euros or Japanese yen. Okay, and this has given rise to local currency for cross-border transaction. Because although we are not in this fight or in this sanction directly, we in ASEAN also feel very uncomfortable, because you do not know when next round they will sanction us, because we take a different stand from their belief, because we believe that that is in the best interest of ASEAN or Indonesia or Singapore or Malaysia. So this is where you see people are saying, okay, thank you very much, US dollars. Now we are looking at trading on our own currency. Okay, so you see this evolution and the cost of it that is moving there. Next. So here it is transacting in person. We are talking about Huawei having been arrested, and then we have seen also fund being frozen. Okay, next. So one of the things that if you end up in a bank, in a financial institution, you have to know this law called Foreign Account Tax Compliance Act of the USA. I very cutely call this fat cat. Actually, it's pronounced as fat car, but I pronounce it as fat cat because there's another meaning to the word fat cat. So, okay, for those who knows what I mean by fat cat, you know the underlying requirement. So what it says simply is that although you are not a US financial institute, you may be BNI, okay? You may be, Bank Negara. If you have US citizen or enterprise that you have deposit or account, you must declare, right, to the inland revenue of USA. Okay, because in the US, their citizen or their tax liable person is subject to global tax. Okay, I repeat, global tax. Unlike in Indonesia, I believe is the case, same. Okay, but the difference is that the US tangan sikit panjang sikit. I hope I pronounced correctly. So they can stretch over from the US to all over the place. Okay. Whereas in Indonesia, in ASEAN, our hands a bit short. We only reach up to here only, then we stop. We cannot reach cross territory. So the impact is different. Right? So you ask, so how powerful? Because your US dollars clearing has to be in New York. Okay. So if you are BNI, sorry, anybody from BNI here? No. So if I use the example BNI, if you got clearing US dollar and you have to make it in US, in New York, and you have a big account, 50 million US dollars customer that you didn't report to the IRS in USA, when they found out about this, all your future transaction through New York, they will pegang, they will hold you. So that's the strength of the US dollars. Okay. So by avoiding not using US dollars, you no need to do clearing in New York. So local currency has its beauty there, you see. You are not under the control of the long hand of the US. Okay, that's number one. Number two, you do not run the risk of running out of US dollars, right? You will never run out of Indonesian rupiah because there's the printing machine that belongs to you that can print rupiah. Okay, so you avoided that headache. Okay, what is the penalty if you do not fulfill and comply with them? Next. 30% withholding tax. Okay, and you will lose access of the US dollars financial market, right? And if, as it is, US dollar is such a major trading currency for you, and you don't have the access to the US financial market, it is going to be a big headache for you as a major banking institution in your country. You go through another bank. Number one, delay. Number two, you have to pay more fees. Okay, so that is what you have to be knowing if you are working for a financial institution today. If you have a US person includes citizen and tax person. And the other one is organization. Okay, so you have for example, one of your account holder is Apple. then you better report all their dealings to the IRS, the US IRS. Okay, so this one is, even if you are in Indonesia, you have to comply. Okay, next. Okay, now we are talking of this local currency transaction. And you can see that Indonesia has formed a national task force to be driving that local currency transaction. And this one is the news reported on the 5th of September. You all can see now the benefit why Bank Negara and the finance ministry is pushing for local currency transaction. It offers a lot of benefit, right? You are not at the risk of speaking out, standing for your national interest and getting sanctioned by foreign powers. So currently, what are the agreements that Indonesia has? Indonesia has got with Malaysia, Thailand, Japan, China. Actually, if I'm not wrong, it's also with Singapore. I may not have it updated after this slide has gone up. Now, the beauty of this is that when you trade on your local currency with your trading partner, okay, you don't have to worry about, one, you don't have US dollars or euros. Two is that if you trade often, you are just simply doing offsetting. All right, you're doing offsetting in a major way, right? And number three is that the fees, okay, the banking fees you earn and keep between the two countries. You don't have to have a third country to earn your fees. Simple, right? That fees you save, you can give to your consumer, to your customer, or simply is that, it can be totally reduced and everybody is much happier. Okay, you won't get sanctioned because you use local currency trading. Okay, next. Now let me talk a little bit more about transfer pricing that Baba Agus just now mentioned a little bit. It is very common for MNC, okay, to because they want to optimize their tax liability and maximize profit, they will book their profit and expenses in different countries. Some are very legitimate, some are not so legitimate. Okay, so here is where it could involve the price of your goods, services, or intellectual property, as Pak Agus has mentioned. And one of the most common thing is that they are charging royalty, licensing fees that is super duper high internally. Okay, it is to them is their left pocket, right pocket, but to the country, it may be a big chunk of their tax revenue. It is not right that if, for example, they make a lot of profit, make a lot of business in Indonesia, but they don't pay too much tax. That is wrong, because Indonesian company have to pay that kind of tax. Why can't MNC pay that kind of tax? Yeah, so that's the principle behind it. Yeah, so you have that situation whereby MNC had been caught for shifting their profit from high tax jurisdiction to the low tax jurisdiction. Ireland is a very famous low tax jurisdiction. It used to be that some of those Cayman Island, all right, British Virgin Island are famous for all these tax things. So the moment, all right, tax authorities see you have a shell company registered in BVI, British Virgin Island, it's a red alert to zoom in. So now it becomes less popular. All right, this sort of tax haven becoming less favorable. So that is the concept. Okay, and quite often also they play among themselves loan, interbank, intergroup loan, and charging interest that is ridiculously high. Okay, because they want to transfer their profit out. Okay, next. So what happened is that because of all this movement, countries Treasury, Finance, Ministry of Finance are working together. It's called the Base Erosion and Profit Sharing Project, started by OECD. And to try and harmonize the tax rules and promote a fairer taxation. Meaning that, for example, country that is so low in their taxation, like Ireland, now has to move up their rate. Okay, so that's what they are trying to move at. Okay, in short, trying to have a more level playing field for everybody. Yeah, next. Okay, so what it is that you will find that if they are making, for example, come back again, if they are making so much business in Indonesia, making so much benefit, profit, and they are paying so less tax because they do transfer pricing, it's a bit unfair because then they are making good use of all the infrastructure, the tax money that other people's that has been put in place, and they are using it, but they are not paying their dues through taxation. So this is where regulation has to be in place, stricter regulation, not only regulation, but enforcement, right? To reflect market condition. So you have the BEPS that is now a project that is going on. And in July, there is an agreement by the G20 finance minister to have that minimum corporate tax rate of 15%. Meaning, if you want to charge 20%, go ahead. But the baseline is we are agreeing on is 15%. Now, I know that there may be a little bit of a loophole if you say that, we have got special economic zone and all that, so forth. But the only explanation I can say for such thing is that it is more limited in scope, right, on the special economic zone or the free trade zone, because there are certain restrictions involved. Yeah, there are this little thing that MNC still can explore, but at least it's not wholesale. It's more limited and it can be monitored a bit better. Next. So what it is that you'll find that country-to-country reporting is becoming more open, meaning that they are exchanging information so that you cannot be hiding from one to the other. And then the other thing is that, which is coming very significant, is digital currency, digital transaction, digital taxation. Now that's a very fascinating area, because when you say digital, you are traceable. You're very traceable. Okay. It has its plus and its minuses. So like with any modern technology, we all have a mobile app, right? We can make payment very fast, but some of us are losing money because of scam on the mobile phone. I know for a fact that in Singapore, a number of us got scammed very badly. Okay, next. Welcome to the world of the wonderful world of tax fraud. People who do tax fraud should be thrown behind bars and the key thrown away. Okay, so fraud is intentionally and dishonestly practicing, making false statement, manipulating your data. You may have 2 sets of books or 3 sets of books, right? One set is for the tax authority so that you are taxed low. Another set is for the bank so that you get high valuation and you can get much more higher bank loan. Okay, no need to guess. I am referring to Donald Trump. Okay, this is not a slander. This is already public information. He's already been sued. Okay, charged, found guilty of tax in the New York court. Okay, so I'm not slandering him. I'm very careful. He's a very powerful man. But that's what's happening. Okay, so that's fraud and accounting fraud. On this area, I don't need to elaborate. You are better than me. Okay, so fraud can be from many angles, and it could be offshore or onshore. Okay, next. And the most classic of them all, is the Enron and the WorldCom incident. Okay, that is back in the early 2000 that happened. And I no need to introduce to you what is Enron has done. A lot of off-balance sheet entity that they are doing to do the fraudulent act. Next. And then, of course, the other one is WorldCom, inflating their asset and then restating their financial statement. Okay, all this here again, you guys are expert. I just want to touch and just move on. Okay, next. So what come out of it was that they found a few things. Number one, they need to have a new act called the Sarbanes-Oxley Act of 2002, right, to have stricter governance. Firstly, they want to have an oversight board on auditors, public accountants, right, because they have found that Arthur Andersen have a conflict of interest. What conflict of interest? They were the auditors for Enron. And they were doing a lot of consultancy for Enron, earning millions of dollars. Okay, so you can imagine your customer, they give you $millions of dollars and their audit, their statement of account is no good. Would you close them? Bit difficult because when they see the dollar, they already marble already, you know. Okay, so to mitigate the conflict of interest, that's why they have this oversight board, stricter rules. And the good thing, which unfortunately is decaying now, is that they are saying if you do the auditing for one firm, you cannot take the consultancy for the same firm. Unfortunately, today, okay, there are accounting firms that have been found to be conflicted. I don't know whether I put this in here or not, but PwC in Australia is found guilty, okay, is found guilty of leaking information about tax regime to their client. That's conflict of interest. That is breach of trust. All that you want to throw it in. PwC, not the Kuching Kurau accounting firm, big name. Okay, big name. Right, and the next danger today is this. A lot of these big accounting firms suddenly overnight become expert in what? Sustainability. Okay, I am into sustainability a lot, so I know this overnight expert because you never heard of them suddenly because of their label, one of the big four, they are the expert and they will provide you with auditing and then the sustainability reporting and then the assurance. Wow. And then they will also provide you with accounting consultancy on sustainability issue. All right, like how to do your credit, you know, a carbon credit certification and so forth. It's scary. I'm seeing this happening again because there is no law to it, and we are waiting for it to. Okay, so be mindful. Next. Okay, I don't like this idea, but I want to put up there is this argument I've said on public listed company before on the board. In Singapore, we only have one board of directors. In Indonesia, I know you got two boards, board of director and board of governor. Yeah. So this one is the Belanda's European practice. The single board is the Anglo-Saxon, the British practice. But never mind. I feel very uncomfortable that when an auditing firm has been auditing the company's account for the last 10 over years, and I ever asked the question, isn't it not so independent? So I got the explanation that, oh, before this, 8 years ago, our partners, the partner that's handling your case was XYZ. Now it's ABC. So I say, we have a China war. I say, huh? I don't buy the story, but my other board members is okay with it. So I voice my thought, I record my thought, so that if later on anything happen, the authority searched the thing, I would have already minuted my thought, because I'm one out of, was it 12 or 15 of them? I cannot outvote them, but I can do my part. Okay, so my point to you here is that all these are because they want to keep the business to within the firm, and I do not agree with it. It should be that there is a strict rule. Once comes the time bar, be it 7 years, 9 years, or 10 years, boom, it has got to be a different auditing firm. No such thing as a different partner. I don't buy it. Okay, I don't buy it. Okay, the other thing is that, like I said, once you do the auditing, you shouldn't do the non-auditing services. Otherwise, here again is the conflict of interest. Back to Enron. Okay, back to Enron. That is my point, but because I have to put in here more politely. Next, please. I just say about sorry, I'm ahead of my slide, so you can be assured this is my slide. Okay, so I have talked about, you know, lately public auditing firm being expert in the carbon area, in the emission area, scary. So when I say history repeat itself, what do I mean? Next. I think I'm talking about my friend. Okay. Yes, that's why I was suddenly, you got me shocked, you know. I thought that was not my slide. I say, mana, ya, where am I? Okay, this is Donald Trump that I mentioned to you ahead. Okay, he is claiming same thing. One set of book for tax department, another set of book is for the banks, because get higher valuation, and therefore he can get more credit facility, right? And one of the most ridiculous thing that the judge is saying is that, hello, you're claiming your bank 30,000 square feet, nearly 3 times its actual size, and therefore overvalued by $207 million. This is the word of the judge, not my word. Okay, so that is kind of practice that they do. And the funny thing is that in the American system, how can they not have sent somebody to survey that property to say what is the land area? 3 times the difference. You don't need an expert to see that it is overclaimed, but yet it's happening. So what it means is that the whole system is a systemic fraud. It's not just Donald Trump, to be fair with him. It's the property valuer that is also a fraud. Okay, thank you. Next, yeah. Okay, so you all know about KYC, you know, what is it about? Okay, so especially when you're a financial institution. That one you guys will be learning. Your cikgu, your lecturer, your professor will be drilling in. So I just want to touch. Next. Money laundering. That one is multi-layer. I don't know whether I put the one that recently happened in Singapore. No? Wow, $1 billion. Malu leh. But malu is malu. We still have to say, so we must learn from it. Next, I hope I have it. Yes. Okay, so this is a case that the Singapore authority have been following for about 2 years. Okay, first it was $1 billion. Okay, that we thought it was money laundering. Okay, and they all came trial when they were charged. Later on, we found that as the investigation goes on, it is 2.4 billion Singapore dollars. Remember, we are talking of Singapore dollar. 1 Singapore dollar, rupiah is 11,200. So you multiply how many trillion it is. It's big money. I don't think in my 10 lifetime I can see so much money. It's a lot of money. Okay, next. Okay. So just to say on that money laundering, it is very wide. And sometimes it takes the authority a while to sift it out. Okay, there is no foolproof, because if you tighten too hard, right, Singapore as an international financial hub will collapse, right? We have to be like firm but not hard. But what is firm, what is not hard, sometimes is a judgment call. And in any procedure, in any system, the human mind is very creative. They will think of many loopholes to get around it. Okay, but the case is being investigated very thoroughly. So you can see that Singapore is so much more poorer because of these people. Okay, so now it's Q&A. Okay, thank you. Thank you.
Thank you, Professor Lee, for sharing your knowledge and insights to us here. Allow me to make a summary of today's topic. First of all, we have to adapt with the fast-paced changing of the world in trade and investments. These changes can bring tax advantages, transfer pricing strategies. So it is important to learn more about tax planning, especially international tax planning. Changes happen in the world right now, currently happening. Free trade area or free trade zone can bring advantages in boosting one country's economic growth. Investor-state dispute resolution, investment, sanctions, multilateral, unilateral, and secondary sanctions, SWIFT, freezing of assets by foreign nations, FATCA, Foreign Account Tax Compliance Act in US, enacted in 2010. It is similar to Indonesian enacting automatic exchange of information. The dollarization using local currencies, national task force to expand the use of local currency in Indonesia, and also important things like tax frauds, accounting audit frauds, and then transfer pricing, shifting profit, from the multinational corporation. Government has tried to combat this by stricter regulations. So these are all the changes happening in the world right now. Conclusions, as I believe most of the participants here and in online are students. So as one of your lecturers, I strongly advise you all to, you have to stop being ignorant. You have to adapt with changes in the world. Only then you can excel in the world and in your life. Okay? Now we begin with the Q&A sessions. But may I remind you all that there is a prize for the best questions in the form of e-money amounting 100,000 rupiahs, which will be announced later. And this also includes for questions come from online participants. Okay? For the first part, so we will receive 3 questions from the audience. Oh, already in Zoom. Okay. How to carry out transfer pricing and profit shifting, and what things must be considered in implementing it? Only one? Is there any questions?
Never mind. Let me answer this one while the rest of you think of other questions. Okay. So the first thing you must have in mind is that you do not want to cheat. Okay. That's very important. If you're thinking of transfer pricing and profit shifting to cheat, then sorry, you are out. So that's number one. Number two, then you got to consult the tax regime regulation of the country you're talking of, the 2 or 3 countries you're talking of, what they allow and what they don't allow. Some country allows you to say, for example, licensing fees for your patent to a certain level, maybe 1%, 2%, or 3%. Okay, so you must know what is allowed in the respective country that you're dealing with. comply with them, and then you can move your transfer pricing accordingly. Because it is true that sometimes, for example, there are certain expertise from the headquarter that original headquarter that you want to deploy into the different operating company in the different countries, and therefore you have to share out the cost. That's legitimate, okay? But you have to do it such that if the tax authority asks you to justify, and then you can put down and say, I equally share his time. He was in Indonesia for 10 days or for 2 months of the year, and therefore I accordingly pro rata charge his salary, his cost accordingly. That usually is convincing. Exactly, of course, then it's up to the tax authority, but in your mind, you must have good justification and to see whether such practices is allowed in the country. It may be reasonable, but in that country it's not reasonable, it's not allowed, sorry. Don't do it. So I repeat, one is don't start with wanting to cheat. Okay, that is the first no. Followed by you must be knowing what is allowed in terms of the tax regime in the country involved in when you want to do the transfer pricing. And the third, make sure your paperwork is clear in terms of the pricing or the cost that you are transferring. Okay, thank you.
Okay. Does that satisfy your questions? Okay, next question. We know that currently Bitcoin or blockchain is used in several countries as transaction tool. Does China already have regulations regarding Bitcoin to prevent transfer pricing tax fraud?
China is used to be a big place for Bitcoin mining because the energy cost in China was cheap. A few years ago, it was already banned. So since it's banned, I don't need the second question automatically answer itself. It is not allowed. So you cannot use Bitcoin to prevent transfer pricing because you're not allowed to use Bitcoin. Okay.
Okay. That answer your question from the online participant?
Yes.
Okay. Maybe we can take questions from the audience here. Already raised hand. Okay.
Okay, first, let me introduce myself. My name is Apriya Putri. I'm from Diploma of Tax Accounting, Trisakti University. And my question is, as we know, many people in Indonesia are entrepreneurs, where most of them fall into the category of micro, small, and medium enterprises, which don't have any insight about trade with other countries. Which I want to ask is, according to Mr. John Lee perspective, what are the things that business people must pay attention to when planning to carry out international trade in terms of taxation and the other things? Thank you.
Can you repeat the question? Sorry.
Slowly. You're speaking too fast for me. My speed is you can slow down.
Okay, sorry.
Thank you.
Just the question.
Okay. Okay. In Indonesia, most of them is fall into a business that the category is micro, small, and medium enterprises, and they don't have any insight about trade with other countries or international trade. And according to Mr. John Lee perspective, what are the things that business people must pay attention to when they planning to carry out international trade in terms of taxation and the other things?
International trade.
Yeah.
Okay, I guess when you want to do international trade or international investment, you must have grown to a certain size. If your size is too small, you will not be in a position to go overseas to do trade or to to do investment, right? Okay, because you see, the simple thing is that overseas buyer say, okay, I want to buy from you. I issue a letter of credit. Do you know how to handle a letter of credit or not? That's the thing. A letter of the credit is a promise note to say I pay you based on certain condition. No? So if you get such things you do not know, then there are few places you got to go. Go to your banker and ask, what is a letter of credit? Okay. Go and ask your auditor, accountant, do you know what about this documentation? If they are buying from you, okay, it is simpler because you're not so much involved in international taxation. You are involved in local still. Although you sometimes have to be careful about secondary sanction, but if you are small, then secondary sanction is not going to be a big thing for you. So if you are a SME doing export and you got a buyer, then it's understanding international trade documentation and rule, like, okay, I'm going to pay you by LC, letter of credit. How are you going to negotiate and get your document? How are you going to get your letter of the bills of lading? How are you going to get your, if there's certification or inspection ticket, how are you going to get your certificate of origin? Right? So you must understand the whole process. Simpler if you are just doing export. Even if you are doing import, is still simpler. Then the next question is, do you know how to open a letter of credit to your exporter? So that process has to be understood. International taxation is a smaller angle there. Okay? So the bigger one is when you're doing big and you're investing. Answer your question?
Okay, thank you, sir.
Any more questions? Okay.
Okay. Okay, sebelumnya thank you so much for the opportunities. Thank you so much, Mr. John, for the explanation. Before you explain how big impact benefits and sanctions will be if we master information related to international taxation in investments, transfer pricing, starting from economic effects, tax revenue, and many more. And you also said that Indonesia still has short hands, which is different from the US, which has maximized existing profits with longer hands. And then we are aware that it is all important to know. So what are our first steps as the successors of the Indonesian nations, especially me as a young person in the future, so that we can change Indonesia to be more advanced in the future? And my next question is, do you think that Indonesia has currently maximized the various opportunities that exist, especially since Indonesia really has the potential to maximize revenue from international taxation? Thank you so much.
The first question. First question.
The first question is,
You have two questions, right?
yeah. My question is, so what are our first steps as the successors of the Indonesian nation?
Kalau bisa bahasa Indonesia aja deh.
Oke. Maksud saya sini pertanyaannya adalah, saya kan udah mendengar nih pemaparan dari Bapaknya terkait dengan pentingnya memahami itu semua tadi. Nah, sebagai anak muda sebenarnya langkah pertama apa yang bisa kita lakukan untuk bisa membuat Indonesia nantinya sama seperti US yang tadi Bapak bilang? Terima kasih.
Sama seperti US.
Ya.
Itu yang pertama.
Ya, yang kedua itu, do you think, apakah kamu, menurut Bapak, apakah saat ini Indonesia sudah memaksimalkan kesempatan-kesempatan yang ada terkait dengan international tax ini? Seperti itu. Terima kasih.
So the first question, okay, if
Oh, sorry.
for the first question is she's asking as a student, now she's a student. How according to you, yeah, what is she going to do to make Indonesia can be the same as in the US,
As
in USA, as big as USA?
I think firstly, you can prepare yourself to run for the presidency in another 20 years' time. Because you are asking a very big question, yeah, that you need a lot of power to be able to drive. But this, no joke, this morning I came down from Bandung on the high-speed rail, and it is super fast, okay? When I was going up to Bandung, it was on the executive train. It took me 2.5 hours, very painful. Today, it took me under 40 minutes, okay, from Bandung to Halim Station, and it's very comfortable, okay? So that is progress, what I'm trying to tell you, okay? So, but your question is very good, but what you're asking is very big. Because if you want to be as big as the USA, which is world #1, China is already trying to be so the last 20, 30 years. So what I'm trying to say to you is that if Indonesia can level up to the next level, okay, then I think we are doing very well. That is more of an economic question than an accounting question or a taxation question. I can reply you in another session, yeah?
Different session. That's
yeah,
a
different session. It's a different session. But like I said, it's good. You got big dream. I don't know whether you don't know it or not, but you're targeting to be for the presidential election in 2034. Not 2034. Okay lah, 10 years enough lah. No, don't wait too long. Okay. Then your second question.
Okay, thank you so much, sir.
Second question is, do you think Indonesia already maximized the potential right now to do what they want to do for like something combating the tax fraud, something like that?
No, not yet. Not yet. I have to shame and tell you, if Singapore has not done it, we are a small place. No offense. We are a small place. We cannot that $2.4 billion money laundering, you know. Then I think, in fairness, combating all this is called a work in progress. It's never complete. Okay. Papa Agus will tell you this until he retires. Okay, it will never be complete. Unfortunately, he cannot have 200 years to live. Otherwise, he will push on. Yeah, but so, you know, combating fraud, maximizing taxation is a work in progress. And honestly, the thing is that Indonesia got a lot more potential. Indonesia is the biggest economy, population in the ASEAN 10 country. You guys got a lot more potential involved than what you are today. That's for sure. That's for sure. Okay, you guys can overtake India first. Okay. No, I'm serious, because India. Okay, jokes aside, India. Okay, is 1.4 billion people. Indonesia is 250 something million. Okay. Okay. India talk about high-speed rail before Indonesia. Okay. Today, Indonesia is saying we are just starting to use our high-speed rail. Okay. Maybe 1 month, this month. Yeah. India is just saying we are beginning to build our high-speed rail. See the difference? So to catch up, I think the target when you next become president is to catch up with India first. Okay. Catch up with America, maybe you leave it to your daughter or to your son better. All right.
Okay, thank you so much, sir, for the answer.
So there are lots of questions in online participants from
Which one you want to take? Them
um,
there. Which one you like? Which one is a bit different?
no,
I think that
I
one,
think yeah. From James, Politeknik Ubaya, why transfer pricing is allowed? If we think about how people maximize their profit by manipulating their prices, it will only make the government having loss about tax. Why the government not repairing this loophole rule? Although many people know about this method, is it because there are regulation about it or there are something else? I think.
Okay, I give you two examples that transfer pricing should be allowed. Okay, number one, intellectual property. Okay, so the intellectual property is held in the corporate HQ, and you want to use the intellectual property. Whether you're in-house or you are outsider, you have to pay licensing fees. That's international. Okay, so if the transfer pricing is because of licensing fees using a patent, it should be allowed. Question is, how much is the licensing fees? Is it 0.5% or is it 5%? And main important thing, that technology, what is the market going rate? Kalau the market going rate is 3% and they are charging 1%, hey, very reasonable. Kalau the market going rate is 1% and you're charging 5%, okay. So that's one example that it should be allowed. I can tell you another example that it can be allowed. If they are borrowing in the local currency, is charging in the local country, is interest is charging is 15%. The head office is lending 10%. Should it be allowed? Why not? I mean, they are below the market in this instant. It's reasonable. You can argue, so therefore, whether the tax authority allow or not, that's another discussion. But if you look at the logic of it, should it be allowed, which is what we are talking now, then on those two bases, it should be allowed. Okay, so don't think that transfer pricing is a dirty word. No, it's not a dirty word. Okay, in itself, it's neutral. It is, what is the intention? Kalau the intention is to cheat, then it's bad. Kalau the intention is to be, it is market, it is reasonable, it should be allowed. Okay, I hope I have answered your question. Yeah, what's her name?
James.
James.
Okay. Ubaya.
Okay.
Yeah. Next question, Yusuf Mulus Ripyanto. Seeing that every country must protect its domestic interests, while international trade cannot be avoided, where tax regulations are also involved, how should Indonesian policy respond to this?
I think this question is for Papa Agus, more than for me. But would you like to take this question? Because we have the tax authority here. I would think that he is the better person. Because I am a foreigner, I do not know about Indonesia tax policy. Kasih Pak yang itu microphone ya. Ya.
Thank you. Sorry. Thank you, Pak John. As Yusuf asking that every country must protect its domestic interests, but international trade cannot be avoided, where tax regulation are also involved. How should Indonesian policy respond? I think it's interest, as Pak John said, if you go to the market or go to the bank and do you ask the credit, and then the bank said, I give you 1,000 with 10% interest. But if you go to your parents' company, and then same as the amount, 1,000, and then the rate is only 5%. It means, as Pak John said, it's fair. It's can be a lot, but if in the international standard, I think it's the OECD, and then all the countries have the same mixed standards. That's, as you said, the rate for interest for one word, I think is maybe use SHIBOR or LIBOR is 5% or 3%. I think it's the rate for the market. But if you ask the, or if you company maybe lend or borrow in the lower rate, it's become the problem, yeah, for tax authority. It's fair or unfair, and Pak John said it's arm's length principle problem. So it's mean Indonesia, as you know, maybe actually in the above question, above answer, yes, above question. Why go? We have,
James, yeah.
I think we have regulation. Yeah, Indonesia have a double taxation agreement in Article 24. Yeah? About mutual agreement procedure, I think, yeah, 25. Usually stipulated in Article 25 about mutual agreement procedure if you have any dispute, yeah, between two companies in two countries. But if you want, yeah, and then you ask to make it's not audited or it's not supervised by tax auditor, you ask tax office to make transfer pricing arrangement for the next year, for 5 years. It's a law, yeah. We call it advanced pricing agreement. So if you have a problem, the solution is stipulated in double taxation agreement in Article 25. It be solved by mutual agreement procedure. But if you want prevent to dispute in the next year, you can ask advanced pricing agreement or APA that I said before. So these two scheme, yeah, two schemes is as Pak John said, it's not the fair value transaction. Transfer pricing is low, but the question is fair or unfair? Yeah, I think it's for fair for taxpayer and then for fair for countries, the tax jurisdiction. I think it's enough. Thank you, Pak John.
Thank you.
Okay, I believe we have the time is up. So for the Q&A session. Let me make closing remarks here. Okay. As students, you have to stop being ignorant. You have to adapt with the changes in the world. Only then you can excel in the world and in your life. Lastly, let me end our seminar by saying a quote I have from Andrew Hay. If you don't open your eyes to your surroundings, you can't even begin to understand how the world works at all. Yeah. Okay. Thank you all.
Thank you, Mr. Adjunct Prof. John C.G. Lee, for the knowledge and new insight. And also thank you for Mr. Limian Sugondo for moderate the session. We would like to ask you to stay on the podium. We would like to present the ceremonial gift to you. And to present the ceremonial gift, we would kindly invite Miss Dr. Erosiana Dewi and Madam Hasnawati. May please come forward. Okay. So move to the next agenda. Dear college and friend and Madam and Sir, now we would hold a photo session. So Madam and Sir and as well as participants are welcome to take a photo session. Oh, on Zoom. So to the all participant on Zoom, please turn on the camera. Yeah, once again, to all the participants on Zoom meeting, please turn on the camera because we will take a picture. Okay. So for the first slide, 1, 2, 3. Another slide, 1, 2, 3. For the third slide, okay, no one turn on the camera. Okay, thank you. For the last agenda, we would like to give certificate as symbolic awarding to our co-hosts in Zoom and this room to Dr. Tartok Tuko, SHMM MBA. So to Miss Dr. Erosiana Dewi, please come forward. So the next one, we would like to give a certificate as symbolic to School Vocation of Sebelas Maret University. The second one is for Politeknik Ubaya, Surabaya. Okay. So, ladies and gentlemen, college and friends, we have had productive and inspiring time together, and this event is about to come to very end. I hope you have found the presentation on this conference and are informative and helpful. Let us all be guided by the things we have learned and heard throughout the seminar and be able to see and influence our future. Thank you, and thank you very much. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Terima kasih.
We would like to announce the best question. For Mr. Liam, maybe. Okay, so I would like to announce the best questioners. The first one is James for Politeknik Ubaya. The second one is Siti Rohma from University of Trisakti University. And the third one is Hendrawan Shah. So for the winner, please reach out please reach out to us. Thank you.